Thomas Gottstein, thank you for giving us a little bit of your time. And I have to say, this is your first earnings results. You're the new chief executive. I mean, wow, what a baptism of fire this is. For the $1 billion in provision and markdowns, what is actually your economic assumption behind this?
Yeah, first of all, thank you, Francine, for having me, and welcome to everybody who is listening into this call. Yes, it was a baptism of fire, as you said. I didn't expect that when I took the role on the 14th of February, but within less than a month, a lot of things have changed. Having said that, I'm actually very pleased with our results. It was a record net income of 1.3 billion, 13% return on tangible equity, and from that perspective, very pleased with the fact that we managed to incorporate a reserve build of 1 billion, as you mentioned, which consists roughly of about 600 million of credit provisions and 400 million of unrealized mark-to-market losses. And as you may or may not know, we are a U.S. GAAP reporter, one of the few European banks that is a U.S. GAAP reporter, and that included also a meaningful portion within our credit provisions of just shy of 400 million of CECL-related write-downs, which are, as you know, not single-name write-downs, but much more a write-downs for the entire lending book. With respect to assumptions, we clearly assume a significant reduction in GDP in the second quarter of roughly 20% in the U.S. and in the high single digits in Europe and in Switzerland. And for the full year, we expect recessions not only in the U.S. but also in Europe and to less extent in Switzerland. But also for Switzerland, our models assume a recession for this calculation.
But so is it the assumption also reflecting the current expectations of the lockdowns being eased and all the government functions working, by May or June, or is it a bigger stress test?
As I said, we assume a recession for Europe, the U.S. and Switzerland, and we have done this on the basis of end of March assumptions. And we factor in very slow removal of lockdowns based on our current knowledge, and it's basically we work with various scenarios as part of this calculations, slower and faster one.
How has transaction income and trading held up actually for the month of April?
Quite good, actually. Volumes are still quite decent, but have come down a bit. But it has stabilized clearly. But transactional revenues are still quite strong.
When you look at what we saw with oil, I mean, Monday was a pretty, incredible day with WTI turning negative. What is the impact of the oil meltdown on Credit Suisse?
Well, it touches a few of our businesses, but one has to say, first of all, out of our over 300 billion loan book, our oil and gas exposure is less than 8 billion, and of that, roughly two-thirds is investment grade. So we are, and that's, by the way, a reduction of just shy of 17% from the levels we had, for example, at the end of 2015. So we have been reducing our oil and gas exposure over the last 3 years. But it touches also some of our other businesses like ship finance, like commodity trade finance. But so far, it has been actually a moderate impact, but it did impact to some extent our credit provisioning going forward. But on a single name basis, so far it has been very moderate.
Will it impact your decision-making on how much more invested you are in this sector and how much more you'll lend?
No, I think it's too early to see. We have to observe how the oil and gas market will develop, but there are no strategic shifts at this stage.
Can you stick, Thomas Gottstein, to your pre-virus targets once economies reopen, or is it too soon given we don't exactly know how government schemes will progress?
Well, our target has been and continues to be to achieve a return on tangible equity of 10% or more. If you actually look at the last 4 quarters, we have achieved that. We are actually above 10%. But clearly, we have to be cautious about making any prognosis for the second, third, and fourth quarter, given the circumstances. But our midterm target clearly remains that we want to stay above 10% return on tangible equity.
Thomas, do you worry about anything being systemic? So I don't know if there's concern that if there are defaults in shale oil in the US, it could become a systemic problem, or if there's a sector that actually you think could become something that looks like a financial crisis.
Well, this is in the first instance a health crisis and a broader economy crisis, and this is not only about oil. This is about transportation, about retail, about everything. And I think so far, if we look at the first quarter results of the U.S. banks, of our results, I think the banks have held up very well. So I think we're far away from a financial crisis, but clearly we have to stay disciplined going forward, both in terms of our capital and liquidity management, but also in terms of our cost management. But I'm confident that the position we have puts us in a strong place to do that.
Credit Suisse also led the IPO of a Chinese Starbucks imitator, Luckin, which then was revealed to be a fraud. How are you responding to this?
I do not want to comment on single names. Apologies for that.
But does it change your strategy? The Credit Suisse strategy was also to lend to entrepreneurs that could have looked like this person here in charge of Luckin. Does it change your strategy in Asia targeting wealthy entrepreneurs?
Not at all. It's as a strategy that I firmly believe in because it combines our strength in private banking and investment banking. And we have had so many success stories all over the world. So this episode is unfortunate that it happened, but we are still at the beginning of various investigations. A lot of parties involved, from the company over the auditors, the law firms involved, etc. So too many parties involved to make any early take any early conclusions.
We were trying to figure out some of the losses in Asia, and there's a reference to a food and drink company, and then in global markets, you also talk about one counterparty, which basically drove down a lot of the results. Can you give us specifics on who those are? No,
the single party that was mentioned in the global markets is a U.S.-based institutional client, and I don't think it's appropriate to talk about names. Thank you.
Thomas Gottstein, talk to me about whether there's an opportunity for European banks and for Credit Suisse to gain market share from U.S. banks because they're under more pressure given the economic situation in the U.S. and interest rates.
Well, look, I think we all have our challenges. We are supporting the Swiss home market. The U.S. banks are supporting, to a larger extent, the U.S. home market through lending. Clearly, what has changed is the interest rate differential. I think the period where we had negative interest rates here and strong positive interest rates in U.S. dollars, that has diminished. So that is certainly something that shifts a little bit the balance back into our favor, but nevertheless, we are pursuing our own strategy with a strong investment banking capabilities supporting our core business, which is private banking, and that's a global effort, which includes also the U.S., which includes Asia, emerging markets, but obviously our home market in Switzerland and the rest of Europe.
What about your business will permanently change, you think, after coronavirus?
It's a bit too early to say, but I mean, I was fascinated and positively surprised how well things worked with people working from home. We had 90%, more than 90% now enabled to work from home. We have about, on any given day now, 80%, 70 to 80% actually working from home. The two main areas where it's less than that, where people are still in the office, is Hong Kong and in Switzerland. In Switzerland, we have still 2/3 of our branches open, but still also Switzerland, we have 70% working from home. But it has clearly accelerated the whole use of online banking and digitalization, and I think that will continue, and it also will make us ask our question, should people work more from home? Do we need that much office space? And things like that. So these are things we are definitely learning from this crisis.